Welcome to the Crypto Podcast. You can find all our episodes on the cryptopodcast.org. Today we're going to be talking about crypto platforms and payments, and my guest is over 30 years of experience in processing, credit card processing, I would say. Please welcome, you're in the Chicago area, please welcome Joe Zahaitis. Zahaitis today.
Close enough. It's Thanks for having me on the show. Appreciate it.
Yeah, no problem at all. So I suppose let's kind of get your career to date, and then we'll kind of touch more in depth.
Sure. I started as I always say, when Jesus left his sandals in the desert. I started in the payment space about 30 years ago, and I was selling payment processing via dial-up modems on terminals to the petroleum industry. So that's really how I got my start in the payment space. And then I've moved on. I tried to get out of the payments world twice, got sucked back in. I've been a senior manager at Bank of America Merchant Services. I was a senior director for the U.S. operations of an internationally based international payments processing company. And currently, I'm the president of two small ISOs that deal both in the high-risk payment processing space as well as in the low-risk payment processing space. And the crypto side of what we're doing is really focused more on that high-risk space right now. And that's what we're here to talk about today. So I've been doing this for a while. It's not my first rodeo.
And I suppose let's kind of learn about your kind of crypto journey as well, because everybody's kind of found out about it different ways. And
I was the biggest naysayer of crypto and still am, for the longest time. If you've ever heard of the tulip craze back in the 1800s, the only reason the tulip craze, and then more recently, which was my ex-wife, the Beanie Baby craze, Beanie Babies only had value because people perceived that they had value. The minute that they thought the Beanie Babies no longer had the value of $200 a Beanie Baby, then poof, they're back down to $4. My challenge with crypto, personally, philosophically, is gold is something I can hold and touch. You can invest in it and not have it, but still, stock, same thing. You invest in a stock, you don't have it, but you kind of do. You kind of own it, but you kind of don't. Crypto, do you really own it? And it's a digital asset. Okay, if we take the stance that it's truly a digital asset, something that exists, even though it's kind of ephemeral in the way it exists. Great, I own a digital asset. How do we move that around? And that's the part that we're looking at, and what I've been in terms of my Coinbase account. I have my Venmo account. I have my PayPal account. I've got some level of either stablecoin or other cryptos in all of them. Thank you, Bitcoin, for tanking over the past couple months now, but it's all good. Mine is just dabbling. I'm not a hardcore investor in that. But the nature of crypto and the nature of digital assets, if you look at their ability to be used as a payment vehicle, I think is pretty exciting, the concept of it. Because you don't have to worry about, in theory, you don't have to worry about exchange rates. I can pay you in one Bitcoin, whether it's US, UK, APAC, South America, it doesn't matter. One Bitcoin is one Bitcoin. And then there's something that comes with that. There's probably an exchange rate element to it where I'm not going to give you one Bitcoin of US to equal one Bitcoin of Japanese yen because of the exchange rate. But in the value of what you're buying, that's all you're concerned about. Is it worth one Bitcoin in the US? Is it worth one Bitcoin and I realize what I'm talking about is crazy in terms of numbers, but let's just go with it. Fractional Bitcoin just gets to be a little ridiculous.
exactly, yeah.
If you look at the nature of the exchange of value, should be something that's easy enough to move around. I send it to you, you send it to me, it's around the globe, it's across the planet, it's across the street, it doesn't matter. The challenge that I've seen as a now Coinbase owner, moving those assets around is kludgy at best. It's not like it's, here's my credit card. Here's my debit card. Here's my online account, which already has my account with you to pay. Hit the pay button, poof, it goes. It's a little kludgier than that. Not in a bad way. I appreciate the security protocols that Coinbase and a lot of the others have, but it's still not a super easy payment vehicle yet.
I suppose my pet peeve is, I've mix recently, and most of them are like that. It's like, if I want to put money on the exchange, yeah, you can transfer from your bank. But if you're using a credit card, debit card, straight away, we'll take it. And then when you want to try and take your money back, it's like they're walking away. They don't know you. And it's like you have to jump through the hoops. And that's why a lot of people, they're getting sick of it. And it's just the whole system is weird the way that it's done. That's acceptable. And then they kind of make it look like it's know your customer. And I say on the Mex one, I submitted all the details, approved and everything. And then when it was time to take the money, oh, you've been flagged. And it was like, it took me over a month to sort it out. Just stupid stuff that they made me jump through hoops when I wanted to take it out immediately.
The the plus and the minus that I've seen in the context of the nature of that, and I get it. And my perception, the way I've kind of resolved to the nature of crypto in my mind, crypto, stablecoin, use it what you want, a digital asset, is think of it as a cash transaction. And that's the way I'm using the model when I talk to any of my clients, when I talk to any of the banks. This is a cash transaction. When you walk into a store and you hand 20 pounds, 20 cash, 20 euros, 20 yen across the counter, and you hand it to the purveyor of that product and they give you the product for it. What is your recourse? I've just paid $20 for a drink. I don't like the drink. Now the barmaid may give me 10, 15, 20 bucks back because I don't like the drink. They're not required to, and the nature of that cash transaction technically is a new transaction because that 20 went into the till. The 20 I might get back is a different 20. It's a whole new transaction that's been created to create that refund, if you will. Where we've gotten lazy, 30-year payments guy, so I'm kind of dissing my own industry. Whoops, it just raised my hand, which was not my intention. In the industry, we've gotten lazy in that, oh, I didn't like that transaction, charge it back. And now the merchant is stuck because now all of a sudden the card issuer is saying, my consumer gets his 20 bucks back. Yeah, but your consumer drank the drink happily sitting at my bar. Yeah, but he didn't like it when he got home. And I'm like, well, hold on, how does that work out? So in the nature of digital assets and where you're seeing some of that difficulty, which I'm actually not opposed to, I have a lot of banks I'm talking to, and the banks are like, yeah, but how do people handle refunds? You go back to the store, online or otherwise, and say, I would like some level of refund. Yeah, but can't they just take it back? This is not a credit card. We got to stop thinking credit card. Credit, debit, and other card transactions. You are effectively initiating a new transaction to do this. I have agreed that what I've sold you is not perhaps up to snuff. You don't like it. You didn't use it. There was no harm, no foul. I will initiate a new transaction to send you 20 bucks back. And that's how that happens. But I'm not obliged to. You bought it. Buyer beware. You paid me. You gave me cash. And now you want it back? It should be easier. I don't deny that. And I agree with you 100%. And that's the thing we're working on in terms of a payments model. But it is a new transaction to effect a refund, a chargeback, or whatever, because in a digital assets world, you sent me the crypto. You now own it. You don't have to give it back to me. It's harsh, but
no. But I mean, because I think a lot of the stuff that's happening in the payment system people should be thinking about. So we might touch on that because just say, for example, is a Shopify or some of these platforms where there's intentional spammers and then they send back stuff. And like, for example, somebody sends the product. I think the vintage is another one. I'm hearing a lot of stuff. And they're paying back the person, like the vintage Shopify and all this. And then it's like the person that has sold the product gets caught because they either say it's a computer, they take the good computer and they take out the chip or something and send it back and say it didn't work. And they usually side on the side of the buyer, which encourages all these spammers because so many people are caught.
Correct. And what you're seeing in the credit card industry, this I can speak to directly. This tangentially touches on crypto, but it's about the credit card industry. One of the biggest challenges that is happening within the nature of the credit card payment space right now is what is classed as friendly fraud. You have individuals, shall not name them, male, female, or otherwise, but in terms of buyers that go out and purchase an item and then will either use, wear, consume the item, then say they don't like it, then return it, whatever's left of it, dirty or otherwise. Yeah, I didn't like it. And then the expectation is you're going to give me my money back. And what they're finding in the industry is that, and this is the issuing side of the bank, someone who gives me a credit card to then use. There are people who are regular infractors of charging things back and or returning things, serial returners, and Amazon's even running into this now. If you return too many products on your Amazon account, you could lose both Prime as well as your Amazon account in its entirety, because Amazon's getting sick of exactly that. People are buying stuff, buy 5 sizes of it. Whichever one fits, we'll keep, and we'll return the other 6, 4, whatever. It's like, dude, know what your size is. I mean, it's not that hard. But even Amazon's getting tired of it. But that, and there's also a lot of identity fraud that's going on where, to your point, especially in the digital assets world, now all of a sudden you've got a fake identity, a fake person coming at you to buy a product. And you sell them the product and you consume what you believe is a digital asset. Now, where this gets good from a digital assets perspective, until I've got the crypto, stablecoin, or otherwise in my wallet, I'm not going to effect the exchange of sending the data set to you. And where that becomes that little hiccup right there, it's like, when do you send? It's a digital asset. You're going to buy a piece of music. Do I send you the music before I get the digital asset? As I'm getting the digital asset? After the digital asset has cleared? Because to your point, now I'm going to get a digital asset in. I'll admit, I don't understand the nuance of some of this. In theory, there are bad cryptos, stuff that's been used nefariously, stolen or otherwise, and they can never be on a good exchange again. And yet it happens all the time. So I look at that and I'm like, okay, someone's letting it back into the system. All of a sudden you get it in your wallet. Now your wallet's flagged because you have a bad piece of crypto in your wallet. It's like, hold on a tick. Now I've just sold a product to someone. Now I have a bad digital asset that I can no longer use. It's basically fraud. You counterfeit bills, it exists. I get it. In the bigger scheme of cash transactions, it exists. And as a retailer, you have to be cautious of those things. But in a digital assets world, what am I going to scan? Unless I can get it from a reliable source that says, okay, I know this digital asset is good. I have deposited into your account, pink, hit the send button and send them their digital asset, their whatever it is, music, whatever you're selling.
What I have seen, and I was looking at the NFTs, because sometimes, and like, it's the NFTs is like what you were saying, it's out, and how something can be a certain price and then it drops. But what NFTs were good is when they had a utility to them. So what I had seen is there was, like, say, paintings that were being sold, but it also included an event ticket that was worth $3,000, membership, 5 memberships that you could pass on. But then people went in and they got them all and then sold them, but they took the assets and there was no way of actually showing it. So people bought it thinking they were getting all of this, and they didn't. They just got this painting, which is nothing.
Right,
It's just a graphic.
Right, a shell. Mm-hmm.
And there was a lot of them doing that. And like, because I witnessed that with a big company, like it was Mind Valley that done it, and I saw what they were doing, and they were selling it, and they had the auction that they have to sell, and they didn't. And it was just so annoying to see a company just kind of promoting mindfulness and everything. But contacting them, I was going around in loops, but it was on OpenSea at the time. They didn't care. And then you've all bots going in as well. That's kind of flicking it. So there's a lot of scamming going on, and sometimes the platforms 100% know. So when the platform knows and the seller knows, they don't care, because it's the idiot that's paying hard-earned cash to get something that, and there's a lot of that. And like, I believe that's kind of changed, that they're able to show the utility, but then they weren't. But you can see how much corruption can happen, without the buyer being aware.
In a digital assets, digital environment, and it can happen at lightning speed, because no longer do you have a physical product that's being exchanged. You walk into my store, I hand you a cutting board, you pay for the cutting board, you walk out the door. That takes a certain amount of time. You can physically see the asset, you can hold it, you can touch it, and you walk out the door with it. You drop it on the way out and it breaks. Okay, not my fault. I'll consider, we'll talk about that. But now you take that same transaction and you make it at the speed of electrons in a digital asset environment. The nature of fraud becomes coding. So now you're coding the fraud into it. And I agree with you. I think that then they're seeing it. We are seeing it. I say there because I was at an event that MasterCard hosted. The card brands are seeing it as an issue because they're seeing synthetic identity fraud skyrocketing. People are making up fake IDs and fake personalities, fake everything, creating accounts, buying products, selling products, and then poof, absconding with all of the money as either a merchant or a consumer, and they're just walking away with it. It's a problem, and I think we're going to see more of it in the near term until we lock it down. Fun fact, though, I love to see the major card brands, and I live in the U.S., so you know who my card brands are. I love to see the major card brands try and keep a toehold into the marketplace, because where we've had a challenge, I think, as an industry, the issuer has plausible deniability in the context of, I just give the card out. I don't know what the consumer's using and doing with it. As long as they're paying their bill, I don't care. The network doesn't care that the rails that it's going across first data. So hey, I'm just providing the rails. All I'm doing is providing the ability for these data points to move back and forth. Not my fault. The acquirer is saying, look, I've got a merchant on my account. Mr. Merchant, it's your responsibility as to who you're selling to. I'm just providing the functionality for you to be able to settle into a settlement account and take care of this for you. It's basically like an open line of credit. But it's up to you, Mr. Merchant, to take care of your risk profile, if you will, in terms of who you're doing business with. So everyone in this chain has no responsibility whatsoever. So to your previous statement of they know what's going on, whether they know or not, they don't care. From their perspective, they're getting their little piece of the puzzle out for every single transaction that runs. And if 90% of them are fraud, who cares? I'm making my money. I don't care. And that's a problem.
The social media, they're all like, there's lots of times there, whether it's on Spotify, Facebook, or whatever. And sometimes they're kind of having, like, you can buy a product a quarter the price. And people think because it's on an ad that's on Facebook or they think it's okay. And it's like, they have no accountability. I mean, they should be totally liable when they're doing it. And people are going, how did this happen? Like, I don't know how they can like, if you're trying to put an ad on, say, YouTube or different things, like, they're really checking everything, making sure it's ring fenced, but the others aren't. And I find it frustrating. Like, I'm sure they're constantly doing it because they open up as company A, they get shut down, company B, and they still allow them to advertise.
Yeah, I won't mention the major e-commerce platforms, but wink, wink, there might be a big one out there that is, I don't want to say they're allowing it. I don't think they're policing it enough, because I actually went to buy a Monero wool, Norwegian kind of like winter coat thing. As a pullover was a hood. It's made out of real thick wool. And I'm like, oh, these look really cool. I saw it online. This is a couple of years ago now. I saw it online. I'm like, these are awesome. I'm going to go buy one. So I go to major platform because I don't want them to be mad at me. And I look up, and sure enough, I found one. They're $50. I'm like, $50, man, that's awesome. What a deal. The picture that was on this major platform was the exact same picture I ended up buying it from. It was the exact same stats within it, and it was being charged $50. And I'm like, I'm finding it hard to believe that something that's this good. I've bought clothing before, so I'm not an idiot. So I go to the internet and I do a search looking for this particular, not brand name, but this product type in terms of what it was. I found their website. The product is $400, not $50. And then I started comparing, and I reached out to the company and I let them know that, and they said, you don't even know the problems we have with this. They used their image from their website on this major e-commerce platform to present that their product was this product and you could get it for $50. Now, I don't doubt that something came that was wool, but it was certainly not what I was intending to buy. And there, now you have a problem, because now you have a nefarious seller
and damaging the brand, and then they go into Trustpilot and bash them saying, hey, they're selling
Exactly.
crap. Yeah,
exactly. So bottom line is that I think we're going to see a few more challenges, even with crypto, before we see better, because there need to be some guardrails on it. And the guardrails need to be, to your point, we talked about it early on, kind of a know your customer, kind of a be cautious with, what you're selling. Oh my God, I just sold 400 of these things. Did you really? So that's going to be an issue.
So if we look, because it needs to be simplified for people to do the transactions, because you mentioned PayPal. That's my pet peeve. I hate PayPal with a vengeance, because there's times they'll take 10%. And there's times, like, there was one time I even sent something as a friend. So you're sending, and they're still charging them when they're not supposed to, or they're charging me. I said, okay, I'm going to take the payment, thinking they'll get the full amount. No, they charge them as well, not letting you know when they only allow you to have one currency. So if you're getting paid in sterling, dollars, and say Polish zlotys, that you set it at one and somebody pays you, they do the conversion, which is at least 3.5. There's times it's up to 10% by the time. And then when I want to transfer to a bank, I have a US dollar account. They won't allow me to do that. They'll only say it yours. So they're double dipping constantly.
Yep, they're handling the FX for you at an extraordinary, exacerbated rate, and yet I'm not a big fan of the organization you mentioned, but where my greatest challenge with it is that if you are, here's my advice to anybody at your listener base, you're tiny, okay, you're operating at a craft fair, okay, you sell 4 products a month, okay, You're doing this as a hobby. Fine. Some of those devices, I'm drawing an image on the screen here, or the one you mentioned, PayPal, that's fine. Because at the end of the day, you're not doing enough volume to matter. The high cost that you're paying for doing that percentage-wise, you don't care. You're getting value in the context that you don't have to set up a merchant account and do all these other things. The minute you're dealing in any amount of volume in terms of dollar amounts and or transaction amounts, like yourself, it behooves any merchant, especially dealing globally, to work with someone. I'm pointing at someone right now in case this is audio only. It behooves you to work with someone because the nature of that FX and moving that money around the globe now starts to impact your revenue stream. And while it may not be huge, it's an impact. And in your case, in the context of, it sounds like, and I didn't know this because I'm not trying to take, lot and move it into USD anytime recently, but I did work for an international payment processing company. And the big thing we had was we had an whole FX department, and they would work with the merchant. These were large merchants. I mean, Valve, Starbucks, some big ass companies, to help them move. And they would only move money cross border when they needed to, wanted to, for very, very specific reasons. And then they would pay the FX, and we would work with them to work with the exchange rates to do it when it was the most advantageous to not have it impact them as much. We take a piece, but nowhere near the piece that you're taking. The minute you're doing volume, some of those smaller brands just become too expensive to really, but no one really, I don't want to say no one knows that. I think what happens is we, as a merchant community, just get lazy. Oh, it works. Right up until Square shuts you off. I've had more consulting friends, coaching type consulting friends. Square shuts them off and holds all the money. And they can for 6 months, just on the off chance that there's a chargeback. I never had a chargeback in my life. I have good clients. It doesn't matter. They can still hold it. And you're stuck without the money. And you relied on it as your revenue source stream. That's for my consulting business. That's the big thing I say. It's like, look, you take a lot of time to pick a doctor, a lawyer, an accountant, and you take the last kid who walked through your door to pick your payment provider. And it's 95%, in some instances 100 if you're online environment, but it's certainly for most retail merchants, it's between 85 and 98, 97% of their rev stream is through their payment provider. And they pick it like flipping a coin. It's like, really? That's the extent of the vetting you're doing of your payment provider? Big mistake.
And because I know you have so much experience with that. A lot of them, I mean, people are just trying to look at it that it's, say, a percentage, but then there's like plus 30 cents or something like that. There's always little things. And I suppose, what kind of tricks do they use that the individual wouldn't be aware of?
How much time have you?
Plenty, because I think if you save somebody from what they're doing, is worth it. Because I saw
the biggest thing, again, for your listener base, and this, I'm going to be talking about this on my podcast as well, and we'll get to that at the end of the show. But from my perspective, the biggest thing any merchant can do, yourself included, take the total amount of volume, dollar amount, GBP, whatever it is, take your total currency volume of transaction for a month, divided by the total, not page 1 total fees, page 5 total fees, right at the bottom, total fees taken. Take those two and do the math and see what that percentage comes up to be. That is your effective rate. So to your point, I'm paying interchange plus 30 cents, plus a couple basis points, plus an annual fee, plus a monthly fee, plus a servicing fee, plus a deposit fee, plus a batch fee, plus a PCI compliance fee, all of those fees don't look like a lot in their individual line items, but when you take them against your volume and you add them up, it's called effective rate. Top line to bottom line, do the math, see what that comes up. If it's north of 3, let's definitely talk. If it's north of 3.5, we should have been talking a while ago. If it's 2.5 to 3, okay, it depends on what you're selling and what you're doing. But I would also be cautious. Are you sure? Because I've had clients that are like, well, I'm getting 2.5 right up until Christmas time. Then magically it's 4 or 6. Well, it's because I had a lot of volume. It's because they're burying the annual fees in your most volume month, and you won't see it because the percentage, the dollar amount that what you're looking at, oh, look, it was $1,000 this month, but it was only $40 every other month. Yeah, but I had a lot of volume. Did you? Because as a percentage, you'll find out that all of a sudden that 2.5 suddenly jumps to 3.5, 4% for the year if you're not reviewing it on a monthly basis.
Something that I'm curious about is, because I've seen it just like whatever, 1.75%, 2.75% plus 30 cents, say, or 30 gralch or whatever in Poland. If a child is going into the shop and he's buying a pack of gum and it costs 20 cent and he pays by card, is it actually costing them money? Yeah. Like, it's like I never understand that, because before I'd see in Ireland, I saw that it was like it must be at least €10. But in Poland, they
Some
don't
businesses, right? Some businesses will make you have a certain amount, or you can't use a card type, and that sometimes the card brands will be mad at. But here's the reason: from a card brand perspective, it makes a certain amount of sense. In an overall average perspective, I charge you a percentage, okay, and a per item fee. And the reason I charge you a per item fee is if you have a bazillion transactions come through at 20 cents, 100,000, and they're all 20-cent transactions, and I'm charging you only a percentage. I'm not going to make enough money to support the nature that I have to do reporting and everything else for you for what is 100,000 transactions. So I need a per item fee to cover the fact that you're burning and churning a whole bunch of low volume transactions in terms of dollar amounts. But I got to make something for that because it costs me to keep the lights on for you. Okay. Other side of that coin. Now I have a per item fee, 10, 20, 30 cents. 30 cents, by the way, is high. We should talk. That's a little too high. But 30 cents a tran for a per item fee and some percentage. Okay. Now I have 4 $20,000 transactions in 1 month. Okay. There's 80 grand at 30 cents a transaction. Now all of a sudden you have a really, really high ticket, low quantity of them, and I'm only charging you 30 cents a transaction. Okay, I've made $1.20 for the month, but I've moved $80,000 worth of your dollars in terms of protecting it, taking care of it, and appropriately handling it. That's why there's a percentage and a per item fee, because you're covering both sides of that line. Some clients, if you have a super, super consistent dollar amount, you sell $5 bracelets online. We know they're going to be $5 all the time. What a good merchant processor will do is say, I will charge you a percentage and no per item fee, because you're going to get burned on the per item fee. But I'm going to up that percentage just a little bit. So if you get a $6 item, an $8 item, a $10 item, it's costing you a little more than that 30 cent would have been, because you're consistently telling me you're going to be in at $5. But don't want to be ripped off by the fact that, to your point, 20-cent pack of gum and I'm paying 30 cents to get it. It's all of a sudden 50 cents and all I did was spend 20 cents. That is something that you should be covering, and you should be working with your consultant to make sure that the average of that averages out. How many of those 20-cent kids do you have come in? 5. Okay. Costs in business. Let the kid use the card. If they're all those kids coming in, we got to look at something else to mitigate and manage that out. It would almost be better to give it to them for free than let them pay that card.
Exactly. Yeah. And like when people are paying by a card, so I think there's even cancellations for holidays, theft and stuff like that. So you might touch on what things you're protected about. And also, I'm not sure, do they use systems? Because I know with insurance, I've had a lot of things with insurance. They never pay you. They never want to pay you. Their role, their business model is not paying you. And I'm just wondering, with the card processing, is there an element to that, or is it you're protected and that's why you're paying up to 3.5%?
Are you talking about the merchant or the consumer?
The consumer.
The nature of the consumer transaction across most of the major card issuing brands, and this goes above the acquirers, because the acquirer is the one who's supporting the merchant. The issuer is who gave me the credit card. I go to the gas station, I fill up my car. And then 20 minutes later, I take my wife's car. Don't have a wife, by the way, but let's just use wife. Take the wife's car, fill it up. Okay, now I've gone to the same gas station 2 times and I filled up 2 cars. Now one of the kids goes with my car to go fill up, and now it's a third. It's called velocity checking. The card company's going to ding me on my phone and say, you know, your card was just used 3 times in the last hour at the same gas station. Is it you? And they've gone to that model because obviously there are multiple vehicles in a lot of families, and that becomes a velocity checking to make sure your card hasn't been ripped off. Where another case, that's one element of helping to protect the consumer. The other place where it happened is I was down many years ago when my children were in college. They're way out of college right now, so let's not talk about that right now. Different topic, different day. When my children were in college, we were at an Apple store because my daughter wanted an Apple something, laptop, whatever, for college. Cool. So we're downtown Chicago and we're buying an Apple at a pretty prestigious, higher, she was going to school downtown, one of the bigger Apple stores in the city of Chicago. I go to run my card. Doesn't work. I'm like, well, that's weird, because I know boatload open to buy on. I mean, I got nothing on the thing. So I'm mad. My phone rings. It's the card come brand calling me. Are you at this location? I'm like, yeah, I am. Great, because we were just flagged, and this location of this Apple store is a high volume fraudulent card where someone steals a wallet. Now they've got the wallet. They run straight into the Apple store and they buy some high ticket product before the consumer even registers it as stolen. And they walk out the door with the product and Apple's stuck. And then now Apple's pissed, consumers pissed, issuing brand is pissed because now they got to get money back. So instead, what they're doing is they're just saying, they didn't tell me this, although I figured it out. I've been in the industry for a while. Basically, this store is flagged to say if it comes out of this store, double check it. So then we got it done. We got it approved. I walked back in the door. He goes, even the kid behind the counter at the Apple store goes, huh, that's weird. Never had that happen before. And I'm thinking to myself, yeah, you have. Every single transaction that's coming in here has probably got that happening. And people have to go approve that, yes, it is in fact me standing in front of it. Because the card brands don't want to have an issue too. Apple takes a hit. The consumer takes a hit. The issuer takes a hit. The whole chain takes a hit by virtue of this fraud. So they put in both systematic as well as manual ways to make sure that some of this can't happen. Nowadays, digital assets, that's going to be harder to do. This stuff is flying at the speed of light.
And like with the PIN, because as far as I remember, there was always a PIN. How come they were able to get products without putting in a PIN number? Because usually...
Because you have Europe. Europe has PIN based on the credit cards as well. We're U.S. U.S. is lazy. And this is a whole thing. Believe me, I've worked for national payment processors. It's called signature. You have signature debit as well. All you do is sign on a credit card. There's no PIN you have to enter. There's no PIN. You can assign a PIN if you want to do it. At most consumers in the U.S., they'll have a PIN for their debit card. Oh, because you're touching my bank account. But they don't have a PIN for their credit card.
It's strange.
Lazy. They don't have to. Now I have to remember it. Now I have to write it down, put it on the back of the card. Now the fraudster has that. I mean, it's a function of just the business model. You also have in Europe, which is what I love. Europeans fundamentally will save money and then buy a product. They don't live on credit. Whereas in the U.S., the typical U.S. consumer, I think the numbers are still holding out to this day, spends at a rate of 137% of their annual salary because they're constantly building their credit up over time and then just paying off little pieces of it.
I remember meeting a guy at an event, and he was the Ferrari dealer in Portugal. And I was asking him, I was saying, like, because they're not cheap cars. And I was like, did they actually take about 3%? I think he told me 2.9 or something like that. And I was like, Jesus Christ, that's a lot of money. Like, is that still the same? Because, like, if I look at, they're in the UEFA Cup and all this, the World Cup, they're all advertising. They've money to burn that they're doing all the adverts in this. Wouldn't you prefer that it wasn't there? Like nobody goes, oh, during the World Cup, I want to sign up for them because it's MasterCard, it's Visa, it's whoever. Like, realistically, even if it was 1%, they're still making money.
Again, how much time have you got? There's a whole thing. We can.
I mean, you're because you don't obviously
get about the entire show part about that.
But like, what rate do you think it actually costs them? Because they're making a boatload of money. But what do you think is actually?
Well, think about it from the issuing side. I issue you a card. You're the card holder. I charge you an interest rate for having the card with me. Okay, in theory, that interest rate is to cover bad debt. People who go belly up on their cards. Do we really believe, would you be a card issuer if, look at the normal card rate that most they charge between $17.99 and $24, and if you get bad by missing a payment or two, $29. So you're paying 25% interest. Would you be a card issuer if 1/4 of your card base was flipping on a regular basis? You'd get out of that business. You're losing. I mean, it doesn't make any sense to be in it unless you can charge enough to be in it. Okay, so if we make the assumption that 25% of the people are going belly up on a regular basis, why am I in this business doing this? Why am I doing this? I don't believe that to be the case because from a fraud perspective and a merchant perspective, merchants have to maintain below 1%. Typically in the U.S., it's below 0.75% to stay in business. If you have chargebacks that are higher than that, they're blaming you, the merchant, for the fact that someone's charging back. It's like, well, how is it my fault? But that's a whole other thing. And the merchant is charged interchange. And the interchange that they're being charged, in theory, covers bad debt. Well, hold on a second. We just covered bad debt on the issuing side. How come we're covering on the... Yeah, it's a cash cow. They're making it coming and going. Bottom line. The card brands were recently on Capitol Hill in the U.S. testifying as to why the card brands, didn't want any more competitors in the marketplace. And there were a couple senators really ripping them about, what do you mean? Why shouldn't there? Oh, it wouldn't be good for the consumer. Really? How much money do you make, card brand? What's your profit margin? They couldn't hide behind this because he had the stats and he had their annual reports. 52%. And he looked right across the table at all of them. He says, how many other businesses around the planet do you know makes 52% on a profit margin? Whatever. It is what it is. It's the industry I've been in for 30 years, and it's part of what I'm consulting against to a certain extent, just to help merchants keep their costs down. We have gotten into a model where if you want to play, you got to pay. And the best thing to do is to figure out how to not pay the least, but get the best value for what you're doing. Because for the most part, the guy who gets squeezed the most is the merchant. The consumer doesn't get squeezed because they get their money back. The issuer doesn't get squeezed because he's making it 6 different ways to midnight off of the consumer and off of the merchant and everybody else. So who ends up getting squeezed is the merchant in the middle, and those are the guys that need the most help.
And is it just the States that you work in, or are you international?
I work around the globe. No, I've been doing this for a while. The international. I didn't know what I didn't know about payment processing until I got with this international company. 4 major card brands. That's it. They got the world covered. Yeah, right up until you get into Europe and you got GiroPay and Yandex and Ideal and all of these other payment models that you guys over in Europe and around the world. There's 150 different what we call alternate payment models, APMs. And those, I got to tell you, those are awesome. I love them. I mean, you look at GiroPay. GiroPay is basically a debit card within Germany, but you got to go by their model. They don't let you do anything else, and they also don't charge you for it, being the merchant doesn't get to make anything on it. The issuer is not, because you're basically doing a debit transaction globally. And that's great. That's fabulous. But a lot of people, especially in the U.S., they go overseas and it's like, hey, let's just do the 4 major card brands. You're doing the 4 major card brands for a digital product in the Netherlands. That's about 10% of their volume. 90% goes on Ideal. If you're not taking Ideal as a payment type, you're losing out. Not that people won't buy, but the propensity to buy is going to be a lot less because they're like, look, if this guy's not taking it, it's like yen. Walk into a store, anywhere. This is going to cost you 53,000 yen. Okay, Roy, quick. What is that in GBP? I don't know. I don't know what it is in USD. So if you're not offering it to your consumer in the currency they're expecting to see it in, that's another problem. I want this. I'll sell it to you for $40. Okay, that's technically 20 GBP because we're still at 2-to-1 the last time I checked, 172. Is it a $20 item? Is it a $40 item? Am I getting ripped off? Are you getting ripped off? If I'm not presenting it to you in your currency of the one you're most friendly with, that is causing the potential for loss of the sale. You're going to abandon the cart going, I don't know what I'm buying. So you'll say, well, I'll buy it from somewhere where I do know what I'm buying, even if the product is a little less in terms of quality or value, because at least I know what I'm getting. We're supposed to be talking about crypto. We've learned a lot.
Because the thing is, if they get into this, a lot of the things that they're doing is relevant to it. So it's that's why I'm kind of touching on it.
Yes.
And what I'd like to know is, I haven't researched this, but I've seen with a lot of different things. Say the ones in the States, Visa, MasterCard, I think Eve Diners and whatever. Mm-hmm. What I've seen is most of the companies are kind of shareholders are BlackRock, Vanguard, maybe Fidelity and everything. And they all own shares in each other.
From an ownership perspective, I cannot tell you who owns or has fundamental investment in major card brands. But what I can tell you is the major card brands, and I said them all. In the U.S., it's 4 top of the house. One of them is really tiny. Visa, MasterCard, American Express, and Discover. Those are what we classically call our 4 card brands in the U.S. But if you look at the top 2, Visa and MasterCard, and what they own, they are invested either through stock ownership or flat out buying these companies. When they feel that someone is coming up, and I say this not lightly, not as a competitor to them, but as a good complementer to something that they're already doing, they pull them into the fold so they can control the direction. And the minute they do that, think about that. Now they're in the fold. It's not that you can't go somewhere else. Well, I want to take Amex. Well, it's more difficult on this platform. Think of Apple and Microsoft. I am a big Microsoft guy. I'm not an Apple guy. What I say is I don't drink the Kool-Aid. But if you look at Apple products by nature, and I just had this happen the other day. Actually, it happened in some of the podcasts I've been on. Hey, go leave us a review on Apple Podcasts. I'm like, okay, I certainly can do that. Click on this link, but you need it to do it with an Apple product, with an Apple yada yada account to be able to even get to the air. I'm like, hold on a second. Apple is presenting itself as good to all people. It has a podcast in the marketplace, but the only way for me to be able to get at it to leave a review is with an Apple product. What that says is, I don't want to be, and that's what the card brands do. You can get at me, but you have to get at me the way I want you to get at me. And I look at that from an Apple perspective, and I say, well, then I'm not leaving a review. As much as I would love to leave yourself, anybody else, and from a podcast, I'm not going to buy an Apple product just to
Just ring up your daughter because she's got another project and you tell her to.
I've converted them a little bit. They're gamers now like their dads, so I've converted them to PC a little bit. But they still love their Apple phones. My point is that Apple has what is a pseudo closed loop model. And the major card brands have turned a lot of their complementors and tangential assets into a semi-closed loop, meaning if they own it, now they can control who can do it. I can shut you off because I am a major card brand and I happen to own your gateway. I control your gateway. I'm invested in your gateway. I'm invested in the guy who does this, and I don't like the fact that you're doing something I don't like, so I will lean back channel. I'll lean back channel on these guys to say, look, I don't like what they're doing. Okay, if I want to keep the investor happy, I better do something about it. To say that it doesn't happen, I mean, it's the reality of life. I'm not saying anything that people don't already know, but I've seen it firsthand, and it's not very conducive to commerce. To go back to the digital asset piece, though, in terms of crypto, I think, okay, now here's my big bold statement. What would be awesome? There are no benevolent players in life, which is unfortunate, but what would be awesome is I can send you a digital asset right now. I can pay you for something right now. Coinbase to Coinbase, platform to platform. I have Coinbase, you have something. It doesn't matter. I can pass you a digital asset pretty easily. We need, as a society, to figure out a way of doing this without all of those guys, without the banks, without the card brands, without the networks, without anything, because I can send you a digital asset right now. All I need is a smoother way to do it. The challenge is, and I mean nothing against any of these players, Coinbase, Circle, just talk up and down all the Vautech. There's couple big ones out there. They're kind of major exchanges. They're all trying to set themselves up to be the one. And okay, that's great. What's it going to cost me? Because I just want to send you $20. I don't want to send you 25 to get you 20. I'll send you 21, 20 and 50 cents. I'll pay a little bit of a premium to be able to do it. Not that I want to eliminate all these other things, but you as a merchant, me as a consumer, you don't want that either. And if we could do this at a 1% range, I'd be willing to pay that to move money around the globe. P2P environment, pure P2P environment. We don't need any of those players. And there's no exchange rate to it because it's digital to digital.
But I think it can even be less because if I look at, say, like Wise is, I don't know, it's less than 1%, I think. But like Revolut, if you pay the $10 Revolut to Revolut, so it's instant. And I mean, if somebody sends me $3,000, I get $3,000. And even if I've it in a different currency, the spread is 0.03, which is incredible. So, right. Like, if they can do it with that, the others could do it as well. And if it's like you say 1%, I actually think 1% I think it should be 0.1. And maybe like when it's a small amount, but the problem is most of the people, like even if you look at, say, Pakistan, Bangladesh, India and all that, most of them are surviving on $50 being transferred and everything. And what's happening is someone's looking at it and go, I sent you 50, I only got 42 or something like that. But they don't want to be going on an exchange and then the exchange and then there's so much know your customer and they don't want to be doing that. So you want it simplified. And I know that there's people that are trying to do it that they'll have a crypto card, and you can put it into the ATM and take it out and use it like a credit card. And like, that's the future. They have to simplify it because it's too complex.
Well, we're getting on, and I could talk with you all day if you want, and we can do another show if you want to be total goal. So. But in the context of, if you look at the nature of where we are right now, take all of that out. We have a pretty complex society because you have GBP, USD, yen, um, um, all of the various currencies. I'm trying to think of a few off the top of my head. All the various currencies around the globe: French franc, Deutschmark. Just all of the different currencies.
Well, they're all gone. They're all euro now.
But yes, but no, because you still will see that stuff listed in Deutsche Mark, not just as euro. My point is that we have a lot of currencies around the globe. There's already a complexity there. Where we're adding a complexity that I think is unnecessary, especially in the States, I have individual states, 50 state union here in the U.S. I have individual states that are issuing their own stablecoin. Okay, as long as they're tied 1-to-1 to the dollar, then we're okay. But then you have, and I don't know if this is happening, but let's just assume it, a Pakistani crypto coin, a Japanese crypto coin, a Belgian crypto coin. You've just added that same exact complexity back into the system because in your Revolut model, Revolut to Revolut, that's fine. What happens when it's Revolut to Deutsche Bank? Oh, someone's going to want a little more of a spread on it, or they're not going to trust it, or not going to believe it. So to your point about the simplicity, there needs to be a model that says, not that I trust you, but in the context of this digital exchange, the blockchain, everything, the ledger in theory makes this legit. I am sending you a digital physical product, a fractional piece of something, Bitcoin, Ethereum, whatever it is, stablecoin. You have accepted it. It exists. Done. That should only have to be what there is. There shouldn't have to be this long, circuitous process where it has to go to an exchange type bank. Someone's got to pay FX. You got to move it to a bank account. It's got to get overseas. Then it's got to be deposited. Then it has to be recognized in that bank account. Everyone's taking their piece of the puzzle along the way just to get you your $20. Shouldn't be that hard. And that's to your point. But everyone's trying to set themselves up to be the end all be all. And I have nothing against Revolut or some of the others that are out there because other banks are trying to do this as well. Banks, pseudo banks, whatever you want to call them, networks, fintechs. Everyone wants to be the player because then they're 0.033. If you're the one, nothing against the card brands in the US. All they do is take what's called dues and assessments. Their piece of the pie is just this small fraction of every transaction, but it's every transaction that's transacted universally. It's a lot of money when you're literally taking a piece of a piece. It's like was it Trading Places? One of the movies with Eddie Murphy, where he deposited the half penny. He deposited the half penny of everybody's paychecks were going into a separate account because there's a rounding error. Well, now take that same, and it's not a rounding error. They physically have this as a charge. Take that across every single piece of, whether it's a 20-cent purchase at a store with a 30-cent upcharge, yep, there's a little piece. Whether it's a $2.5 million Ferrari, there's a little piece. But it's every single transaction. That's a lot of money.
And with the Revolut, because when I had the situation with Max, I had the option then of sending it to like a bank account, which was the Revolut I'm doing. And when I started investigating, it's like, it works sometimes. You don't want to hear that when you're transferring your thing. So
your paycheck is suddenly, it might work. That's not a good sign.
Yeah. And like with the ATMs, because I don't know, do you use that in the States, but here they've got like the crypto ATMs. So what you do is you press the button, out comes a code, and then you scan it and you've authentication, two-factor authentication. So you kind of save for yourself. And then you come back 15 minutes later when it's done, put the code and out comes your cash. But they're taking a 4% spread there, so like each time it's like, well, you're taking it. If I had got it from PayPal and then sending it to him and he's sending it around, they're all rich and the money's just disappeared.
Well, and I know that the nature of some of the ATM transactions, to remove it, what you're doing is you're basically offlining the crypto. You're taking it out of the system. You're converting it into fiat. And it's not that that's an impossible transaction, but it does take time to finalize the transaction. And because of the held and bad crypto elements that are within the marketplace, those that are no longer allowed on the good exchanges, they want to make sure that everything is settled before they give you their money. So the 4 or 15-minute thing, that makes sense. The 4%, really, let's think about that for a minute. You literally took a digital asset, you moved it digitally across the platform, you digitally made sure it was secured, you digitally confirmed it, and you digitally deposited it, but yet somehow that cost me 4% to get there. How do you figure that? And if you're at this juncture right now in this time, it's only because they can. When the competition is going to eliminate that over a period of time, because the Revoluts of the world and everybody else are going to say, well, I'm willing to take less to get your business. Okay. Well, I'm willing to take less to get your business. It's going to be back. It'll be the mad dash to the bottom, just like everywhere else.
Because I'm actually seeing that now, because like the ones I'd have is say Wise and Revolut, but there's a load of them. For some reason, the way when you mention something on, like, say, Facebook or Instagram, I don't know how many of them is there, but there is a load of different platforms now, like the Revolut. And yeah, it's kind of,
Well,
yeah,
it is.
they're going to, like, they all won't survive. Like, it's not possible.
Well, no, it's the wild, wild west right now because it is a digital play. And if you get enough coders together, you could, in theory, build your own platform and it would work. And that's fine. And that's a good thing. Competition's a good thing. It's capitalism. It's everything else. But to your point, we're so in the early phases of this whole digital asset currency element that, not that there are nefarious players that are out there doing this, there's just so many of them that, it's like Betamax versus VHS and everything else, CDs versus DVD versus Blu-rays. You hitch your wagon to the wrong one, and all of a sudden, it's not that you can't transact, but you're going to end up having to shift anyhow because the competition is going to eliminate people out of the marketplace. My biggest wait and see, honestly, and I mean this, I hesitate to say this, not that I don't want your listeners to hear it, but I don't want to put a scare out there. I'm trying to figure out, and I'm watching it, and I see it, but I can't quite see through the fog of how the major card brands here in the States are trying to maintain their relevancy by becoming the network across which these types of digital transactions and assets have to exchange. And I look at that and I'm like, but why? They don't need to be there at all. They don't need to be a part of this at all. So I don't understand why they even need to be a part of it, but they're trying to maintain their toehold in the marketplace by becoming these trusted networks across which you can settle these transactions. I don't need it. I got Coinbase to Coinbase. I don't need it. I don't need a trusted network to cross the transaction. We have yet to see. What else you want to talk about? We went
For those
way off
watching,
the Brock.
I thought my power went there at one stage because it just went dark, but it was like my light just decided to kind of.
I saw it. I'm like, okay.
I thought the internet was gone. I thought
that's what I'm talking anymore.
Okay. One thing, because I spoke to some people on the show, and when someone has a crypto business that's trying to break into the system and try to go against the big boys, they don't want them there. Like Stripe, and I've heard all of them are going against them, and they have to navigate around it so much that no one will do processing for them. Because obviously, why would you? When you're getting 3% and then these guys aren't going, you don't want them to be successful. So, like, is there any kind of law that's going to start protecting the person that wants to change the model? Because, like, the reality is, it's humanity benefits when these guys are able to do processing at, say, the 0.1% instead of people paying,
The major players have used and are continuing to use and will forever use the nature of trust. Well, I can't let that crypto or that player to operate on my platform because we don't trust them. Now, if you use, me to me, Revolut to Revolut, PayPal to PayPal, pick your poison in that, then it's good because I trust it. But these guys from outside, boy, I don't trust them. That's why we don't do business with them. The reality of it is, to your point, they're just blocking them out. Are they really non-trustworthy? Are really nefarious players? No, not. They're just trying to establish their own brand in the marketplace to be able to do their own processing, their own platform, their own whatever. And they're being blocked. I would use a phrase from a bar room, but let's not use that one. But yes, they're being blocked.
What about like Stripe? Because like I mentioned, they are definitely stuff. But I saw recently that it was like, when you've money in your account, usually you can kind of use it when you want. They have a minimum $250 before you take it out. I mean, how are they allowed to do that? Like, if
that one I wasn't aware of that.
Yeah, because I was thinking, if somebody's like in one of the countries that I mentioned, and they might get $50 or $100 or something like that they might need to be feeding their family or doing whatever they need to do.
Sure, it's a lot of money to them.
And then they've decided, it's $250 before you can start taking it. I mean, it boils my blood when I see things like that. It's like, we just decide. And what are they doing with that money? They're making money from that money.
Oh, it's overnight investment. The minute you've got it in the bank, it's effectively in their bank, and they're able to make overnight investment with that. I was a banker many years ago, and we would do that with our cash on hand all the time. We would invest it with the Fed, make a couple fractions of a penny overnight, and you do what was called overnight investment on whatever you had cash position. on a
We
regular
had a
basis. And that's
currency
exactly what we're
exchange
doing.
business, and we done a lot on currency exchange, and we used to do the overnight, and we actually made
Right.
good money on that. Like,
Yep.
but nobody.
And the other guys that make it good on are the FX guys if you do it right, but you got to really have been in. This is all magic black box stuff to me, but when you do it and do it right, you can play the currencies as they go up and down. And if you're holding a good position on one currency and then it starts to go in a direction where you can make money on it, these guys on a small swing can make a huge amount of money. You can also lose a lot of money because you have to hold it for an extra couple of days and you really can't, and you don't have the position and this and that, and it could end up biting you. But yeah, that's to your point. That's what not taking it out at 250. I have not heard that. I will investigate that because it seems to me like I guess they could, because technically they're not a bank. Because when you're a bank, if I've got $5.28 in my checking account and I want to walk into the bank and take out, by law, I think it even is, you have to give me access to my money, even if it's $1. But these guys apparently they're probably banking or playing on the fact that, well, we're not a bank, we're a platform. Okay, you played that before when you said you were a bank, not a platform. They're playing whenever it's convenient to them.
So just finally, like your podcast, you're setting up a podcast. You might let
Yes, sir.
listeners what it's going to be called and what you're covering.
I have a podcast that's starting. It's not up yet, but you can get at it or find it because I'm going to be promoting it on my website. My last name, Zahaitis, ZAHAITIS.com. So I own the domain, and you can get at it. And all that's kind of the center of all things. It's my personal brand. I have a consultancy through that is Zahaitis Consulting for the payments industry. And the actual podcast is going to be called Hard Currency. Hard Currency, and the name is Business, Bourbon, and the Future of Money. So we're going to talk about more things than just payment processing, because even for me, that would be boring after a couple of episodes. But this is the exact kind of conversation I want to have, and I want to have you on the show to talk about your input and your perception from your part of the world from a crypto perspective, because that's a big part. That's that future of money from my perspective. That's going to be a big piece of this.
Thoroughly enjoyed it. So you've mentioned the website. You might just say it again so people can find you. And is there any other social media handles that you want to?
Oh, you can find me on LinkedIn. Same Joe Zahaitis. I'm out there all over the place. Zahaitis.com is probably the best place. I do have a website. It's called The Payment Process. I own that domain. It's The Payment Process. That's more of the educational side of life, where you'll be able to get at coursework and get out some of the consultancy. But that's The Payment Process. I also own an internet radio station. You don't want to get into all of that right now, but yeah, Zahaitis.com is the best way to get a hold of me. And if you need to reach out to me directly, if you would like to set up some time to talk, and I love to talk, obviously, this has been a great conversation. You can contact my admin, Julie, Julie, Julie at Zahaitis.com. I gave her a super, super easy email. You just contact Julie, send her an email, and she'll work with you to set up time with me to talk on the phone.
Excellent. Yeah, I'll make sure I'll put all the links both on the audio and the video.
Perfect.
Thank you very much, Joe.
Appreciate it. Thank you, sir.
No problem. So that's all for the Crypto Podcast. You find all our episodes on cryptopodcast.org. You find everything about me. Scan the QR code or go to roycoughlan.com. That's ROYCOUGHLAN.com. And if you're looking for virtual assistants, go to va.world. And I always say, like, a 5-star rating and a comment is nice. Maybe share with a few friends. But depending on when you listen to this, you might check out Joe's podcast. Since he's starting, it really makes a big difference. You might do the same. Give a listen, give a thumbs up, give a 5-star. Until next week, take care.